Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets behind corporate jargon and numbers. So you don't have to. Today we're diving into something that might sound a bit like corporate magic or maybe a really confusing math problem. We're talking about a company that has decided to change its fundamental DNA stock-wise. Stick around because this could seriously impact how you look at this company's shares. And hey, before we jump in, if you appreciate getting straight insights from corporate filings like this without the fluff, make sure you are subscribed. We also have a Discord community linked in the description below where we break down these kinds of things even further. We've got a filing here from Heritage Distilling Holding Company Incorporated, and it is all about a pretty significant change they're making to their stock. It is called a reverse stock split. Now, that sounds technical, but let's break down what it means for the company and its investors. Imagine you have a pizza cut into 20 slices, and then you decide to take those 20 slices and make them into just one giant slice. That is essentially what a reverse stock split does for shares. So Heritage Distilling Holding Company, or as they do business, IP Strategy, has officially filed to do a 1-for-20 reverse stock split. What this means is for every 20 shares you currently own, you'll end up with just one share. Why would a company do this? Well, the report tells us they're doing it as part of their overall plan to manage dilution and, importantly, to stay compliant with NASDAQ listing rules. Specifically, they mention NASDAQ listing rule 5550-2, which often relates to maintaining a minimum bid price for stocks. Companies sometimes do this when their stock price has fallen very low, and they want to artificially boost that price to avoid being delisted from major exchanges, like the NASDAQ. This change is set to officially kick in at 12:01 AM Eastern Time on the 5th of November, 2025. The stock will start trading on this new split adjusted basis when the market opens on that same day, and it will keep its current trading symbol. IP'd, however, the CUSIP number, which is like a social security number for the stock, will change to 42,727 R203. Now, here is where it gets a little tricky for shareholders. They are not issuing fractional shares. That means if your split ownership calculation doesn't result in a whole number, you won't get a fraction of a share. Instead, you'll get paid cash for that fraction. The amount of cash will be based on the stock's closing price on the 4th of November, the day before the split officially takes effect. So if you were supposed to get half a share, you'll get cash for that half based on the price that day. If you hold your shares electronically or through a broker, this adjustment will happen automatically in your account. For those holding physical certificates, the company's transfer agent, Equiniti Trust Company LLC, will handle the process. But generally, if you are with a broker, you won't need to do anything. This decision wasn't made overnight. Back in September, the company's shareholders gave the green light for a reverse stock split, with the board having the flexibility to choose a ratio anywhere from 1-for-5 to 1-for-20. Then on the 16th of October, the board officially decided on the 1-for-20 ratio. So this has been in the works for a bit. Let's look at the numbers. As of the 30th of October, there were over 183 million shares of common stock out there. After this 1-for-20 split, that number will dramatically decrease to approximately 9.17 million shares. While the number of shares goes down, the total value of the company shouldn't change based on the split itself. It is like cutting the pizza into fewer, bigger slices. There is still the same amount of pizza. This reverse split also affects other equity instruments. Stock options, warrants, and any other awards that give people the right to buy company stock will also be adjusted by this 1-for-20 ratio. The number of shares you can get through these options will be reduced, and importantly, the price you paid to exercise these options or warrants will go up proportionally. The goal here is that the total cost to buy those shares, the aggregate exercise price, stays roughly the same. The company's authorized capital stock, meaning the maximum number of shares it is allowed to issue, will remain unchanged. What does all this mean for you as a shareholder? Immediately after the split, your percentage ownership in the company and your voting power should stay pretty much the same. Except for those minor adjustments due to rounding fractional shares, the rights and privileges of holding the company's common stock will also largely remain unaffected. The main effect of this reverse split is to increase the number of shares available for future issuance and to boost the per share price, making it hopefully more attractive to investors and compliant with exchange rules. This filing is accompanied by a press release from the 31st of October, that further details this announcement. And as required for official filings like this, we have the Certificate of Amendment dated the 30th of October as Exhibit 3.1, and the press release as Exhibit 99.1. The report is signed by Justin Stiefel, the Chief Executive Officer. So what is the story here? Heritage Distilling Holding Company, operating as IP Strategy, is essentially performing a financial maneuver to reduce its share count and increase its stock price. This is a common tactic for companies whose stock has fallen significantly, often to avoid delisting from major exchanges like the Nasdaq. The primary goal is to meet minimum price requirements and appear more attractive to institutional investors who may have rules against buying very low price stocks. From a Warren Buffett perspective, you'd look at this and think, what is the underlying business doing? A reverse stock split doesn't magically fix a company's problems. If the business itself isn't performing well, if it is not generating profits or growing its revenue, then no amount of stock manipulation will change that. In many cases, a reverse split is a sign that a company has struggled to maintain its share price through actual performance. The risk here is that this is a cosmetic change. It doesn't change the company's fundamentals. Investors need to ask themselves if the underlying business has a solid strategy and the ability to execute it. The fact that they have to do a reverse split to stay on the Nasdaq raises questions about their past performance and perhaps their future prospects if they can't improve their actual business results. However, there could be an opportunity if the company has a solid turnaround plan, and this reverse split is just a step to regain credibility and access to capital markets. It could be positive in the long run. But without seeing the actual financial performance driving this decision, it is a bit of a red flag. We'd need to see consistent revenue growth, profitability, and strong cash flow to feel truly optimistic. In conclusion, this reverse stock split is a strategic move by Heritage Distilling Holding Company to address its stock price and exchange listing requirements. While it doesn't change the intrinsic value of the company, it is a signal that the company has faced challenges. Investors should look beyond the split itself and focus on the company's actual business performance. Alright, that is our breakdown of Heritage Distilling Holding Company's announcement. What is your take on this reverse stock split and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.